Welcome to another edition of Zacks Rank Buy. I am Brian Bolin. I'm the aggressive growth stock strategist here at Zacks. And I got two more stocks for your aggressive growth radar screen. And since I have a bad hair day, let's go right to it. All right, it's BlackBerry is our first one. Maybe you remember this stock from the early 2000s, maybe whenever that was, a long time ago, when BlackBerries ruled the roost. BB is the ticker, just like my initials, Brian Bolin, BB. I should love this stock a lot more. It's a Zacks rank number one strong buy, A for growth, F for value, and it's shrunk down to a market cap of only $2.5 billion, and very liquid, I might add, with 15 million shares traded every day. We can just see right here, we had a recent beat, and after that beat, it's been a very solid return for those who put in some risk capital into a name that seems to have been destroyed. So I think the story with BlackBerry is basically they're trying to move from being the mobile phone thing. Obviously, no one carries a BlackBerry around anymore, but they're looking to do self-driving cars and that sort of thing. So they've got some good technology in that space. All right, so let's see, what do the numbers tell us? Because that's the first thing. We got to have good numbers before we really care about the idea. That's a gigantic beat. That's a beat, but you've lost some money. Here you've broken even, but you were looking for a loss, so you got a beat. And here you made some money, beat. So we've been beating the number, and they're beating it handily, even though it's just a couple pennies. Let's see where the estimates are telling us. Flat for this quarter. Next quarter, no estimate. Don't really like to see that. For the full year, fiscal 2025, they're looking for a penny. And then next year, it goes from 2 cents to 7 cents. That is an indication of very good things to come, right? I mean, that's a big percentage increase. All right, what about money? Are you making money? Are you selling your products? Well, we had big time revenue contraction this fiscal year, 35% down to 562, and we're looking at flat next year. So that makes me wonder how this even got such a strong style score for growth. What do we got? We got an A for growth. Maybe there's a ghost in the machine. Who knows? But no real growth there for BlackBerry. And here's the problem. I guess if you don't have growth, even though the thing says it's an A, you're looking at 409 times forward earnings. That is a ton. Price to book, only 3.3. Interesting. Earnings being only that penny. So that's probably the reason there. 4 times sales is a lot when you're not really having any sales. But our operating margins are improving in a dramatic fashion from -8 to -4, getting cut in half almost every time around. Let's take a look at the chart. Interesting chart. We see that the company beats the number. I mean, these are all beats. Oh, wait, is that a miss? There's a miss. That is the miss. So they're not all beats. There's one miss. But the interesting thing here to me is even as you're beating, you're going down. But now, are we starting to tick back up? And does this $4 stock have a chance to get to $6? Earnings estimates, being up here, are pretty good. I like to see that. So we'll see what the 2026 numbers come out. If there is continued growth, going from 1 cent to 7 cents, then there's a good chance that this stock becomes very attractive to investors. All right, it's nice and liquid. It's BlackBerry. It's BB. Oh, Canada. All right, on to Elastic. Elastic is the name, ESTC, and it's a Zacks rank number one. B for growth, F for value. Big growth divergence there, so we love to see that. The stock is breaking out today. So I'm going to highlight that. As I'm filming this video, stock's up about $10, about 9%. Big move. Didn't really get beat up yesterday. As we can see from this chart, we would see a downline. Should be a downline there. Everything got sold off. Not this name. That's why we put these 2 and 2 together. Yesterday, big sell-off in the market due to DeepSeek, Chinese AI tool. So you would expect everything to sell off, but investors did not want to sell this off. We saw there was a lot of hedge fund trading that caused sell-off. Retail buyers were coming in strong into names like NVIDIA yesterday. So, all right, $10 billion market cap, pretty liquid, million shares a day at 114. That's $114 million per trading day. So we're okay there on liquidity. We do see a big PE coming up. So Let's take a look here. Are you beating the number? You're beating it. You're beating it. You're beating it. And big beat here. So, 59 cents. We do 36 down to 21, up to 35, up to 59. So that's great to see on an absolute basis. Now, the important thing is going to be what's going to happen in the future. We don't buy the stock for what it did. We buy it for what it's going to do. 47 cents is okay, but I would like to see it better. 30 cents is okay, but I'd like to see something more. 69 to 71. Got the arrow up for that. Unfortunately, we're seeing 94 to 93. So a little confusion there, even though the stock is breaking out. So what's our growth profile? Well, we're looking at 14.8% this year, fiscal year, I'd remind you. It's April fiscal year. And then next year, 13.5%. So you got double-digit growth. You got a good-sized client base. The company is known for providing the maps and real-time information and observability functionalities. Uber and Lyft, those sorts of things, they use them to secure where those cars are. All right, 61 times forward earnings. That's a big multiple for something growing at only 17%, but I'm pretty sure they're locked in with their customers. 13 times book. Asset Slim, it's a software name. 8 times price to sales. Here again, we see margins improving, but negative. Don't like negative margins. I like positive margins. That tells you maybe there's a chance down the road this stock could really, really move higher with positive margin environment. All right. So this stock, if you're looking at the line chart here, you get a little bit lost in some of these things. There's been so many gap movements here just in the last year or so. So just before October, this was a huge gap up. So the price was down here. The next thing you know, the price is here. So it's down here, next thing here. So the line chart doesn't show you that gap. The candle chart would show you that gap, but it's beyond my technical capability of showing you that, at least in this chart, because I love this chart with the price and earnings consensus. All right, so everyone was going to die, but we had all kinds of QE coming in. Then we have the tech wreck of 2022. A nice rebound in 23. 24 saw a little problem, and then this is another big gap down right here. Even though it was a beat, I think we had bad guidance, but things turned out okay. This was actually another gap higher in between these two marks here on this next beat. And then today the stock is pumping higher on good volume. So it's definitely one that I want to keep on your radar screen. It's elastic. It's ESTC is the ticker. All right, that does it for me this week. Be sure to join me next week when I got 2 more stocks for your aggressive growth radar screen. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.